Welcome to the world of meme coin trading. A hobby, if you can call it that, where the main objective is to not get rugged. Here, fortunes are won and lost in an instant. Will it be pot noodle tomorrow or a lobster dinner? All part of the thrill for these complete morons. While most traders spend their time on centralized exchanges, the real degenerates are found on Uniswap, a decentralized exchange where anyone can list any old shite. If you want to make real money, you need to be early. Really early. And these clowns know it. That's why they're glued to their screens, searching through the depths of Telegram and shitcoin Twitter. On hand with their grandmother's savings, ready to strike at the first not too shit-looking project they see. $200 buy-in with $50 for gas. The future of finance indeed. On this particular day, Elon Musk has just tweeted about having waffles for breakfast. And so it begins. Waffles, Waffles Inu, Waffles AI, Waffle Doge, Waffle Pepe, Harry Waffles, Obama Sonic Inu. All launched within the first 10 minutes. Panic for shitcoiners, which token will be the one to make it and which ones are the rugs. Unfortunately, the worst has happened. Even though many of the projects weren't honeypots or rugs, Elon has tweeted again. This time about his new pet snail. Every meme coin trader knows that Elon's tweets about his pets trump any generic breakfast tweet. As the liquidity floods out of Waffles-associated coins, our early buyers are left with nothing. $250 down, and it's not even lunch. Not a terrible start to the day for a shitcoiner. Welcome to the world of meme coin trading. A hobby, if you can call it that, where the main objective is to not get rugged. Here, fortunes are won and lost in an instant. Will it be pot noodle tomorrow or a lobster dinner? All part of the thrill for these complete morons. While most traders spend their time on centralized exchanges, the real degenerates are found on Uniswap, a decentralized exchange where anyone can list any old shite. If you want to make real money, you need to be early. Really early. And these clowns know it. That's why they're glued to their screens, searching through the depths of Telegram and shitcoin Twitter. On hand with their grandmother's savings, ready to strike at the first not too shit-looking project they see. $200 buy-in with $50 for gas. The future of finance indeed. On this particular day, Elon Musk has just tweeted about having waffles for breakfast. And so it begins. Waffles, Waffles Inu, Waffles AI, Waffle Doge, Waffle Pepe, Harry Waffles, Obama Sonic Inu. All launched within the first 10 minutes. Panic for shitcoiners, which token will be the one to make it and which ones are the rugs. Unfortunately, the worst has happened. Even though many of the projects weren't honeypots or rugs, Elon has tweeted again. This time about his new pet snail. Every meme coin trader knows that Elon's tweets about his pets trump any generic breakfast tweet. As the liquidity floods out of Waffles-associated coins, our early buyers are left with nothing. $250 down, and it's not even lunch. Not a terrible start to the day for a shitcoiner.
Testing 1 2, testing 1 2. Just getting the microphone checked out here, making sure everyone can hear me over in YouTube if you're in there, and in the alternate stream over here. My voice is a little crackly today. My apologies. At the end of whatever it is that I had caught, some kind of summer cold. Do apologize about that, but let me know if you can hear me okay. Okay, thank you guys. So I got confirmation over here in the other stream. Ooh, that was a whistly S. And YouTube as well. Cool. Alright, got about a little less than 5 minutes here, and then we're going to jump right into it. So hang tight for just a few more moments here and listen to the sweet beats. And I'll be back shortly. It's synthwave, sir. I don't know what songs are playing because I can't actually hear it, but apparently it's synthwave by Streamlabs Music. And let's see here. Well, we are going to get rolling in just a moment. If I can ask you a favor, if you are in the YouTube chat and you feel so inclined, please go ahead and hit the like button there. It does actually help out. I see that there's quite a few concurrent viewers. I've got about 15, but I only see a couple of you guys chatting. I see Jedi, hello. No Name, hello. JR, how you doing, sir? Spin is here, hello Spin. I think I said Jedi. How you doing, buddy? Ricare? I don't know how to say your name, sir. Mr. Large, hello. Alright, we're gonna get rolling here in just a moment. Of course it's synthwave, yeah. It's like their only real track of synthwave on here. So, what we're gonna do, somebody in one of these chats, can you guys find me the full version of the David Attenborough talking about shitcoins? Because that's a hilarious AI generated clip there. I'd like to find the full thing. Need more Bartwave. All right, let's go ahead and get the music under control here, and I'll use my own voice to hold everybody over. I know you just really loved all the different tracks that we're playing from this playlist here on Streamlabs Music. All right. And then we'll get rolling into this in just a moment. Sounds like Nick Nolte and Don Johnson are going to show up. They might. They just might. All right. Let me go ahead and prep this so that we can move on to the actual stream here. Nice little macro Monday going on. Get the coughs out before the actual stream starts. And let's roll. Hello and welcome to Landy's Crypto Corner. Today is a Macro Monday Bitcoin analysis day here with Landy, that's me. And we're going to take a look at Bitcoin on the longer term timeframes and weave that into our daily analysis. We're also going to take a look at, it's more of a follow-up from the last stream here, where we are going to look at the volume-based swing fail patterns, just to review a few things that people had questions about, and the importance of not really tweaking that system until you have a very, very good understanding of what it is that you're looking for. We'll also take a look at traditional markets shortly, and Dixie and gold. And let's jump right into it. So Bitcoin is still hanging out on the lower first area. It has wicked in here a few times since we last spoke. And, lower first standard deviation of the Bollinger Bands here is coming in at 25,650 or so. Basis band is just overhead, and it is within range right around the close open high here before the nice little trap pump up to trap all the bulls. And that is roughly 26,350 to 26,400. On some exchanges, the closes did come in at 26.5, so keep that in mind. Above there, I would start targeting the upper first around $27,000. And in fact, let's go over and take a look at the Bitcoin in 60 seconds chart, because I mapped this out a little bit more accurately in that Bitcoin in 60 seconds video yesterday. And this is going to be basically, the criteria is trading back above 26K. Watch out for these two wick highs around 26,100. You can see that since that video was posted, we did see a spike up there around 26,093 bucks. Fell back below the weekly support here, nearly hitting the lower first here. About what did this come in at? 25,714. So a little less than 65 bucks above this lower first standard deviation. Maybe it is about $60 to $70 there, but that is going to oscillate with price action until we see the next closure. And in this case, if this area to the downside is lost at the lower first, I would generally be looking for the wick lows to get ran. 26.5, 26.3 on these two lows. I believe this is around 26.6 actually. So 26.5 to 6, these two wick lows, which would be a very nice area to hold if the bulls can hold it and price does get there around 26.3 down to this 26.2 area into this daily support. Now, if we do see price trade into the daily support, that's around 25.2. I know it is marked as 25,123 on the Bitcoin in 60 seconds chart. That is because of where this close open structure is on the lows, where the wick low is coming in at 24,750. So this is closing. So this is going to be the closing low to the closing high here before the move up. So this zone is around 25.1 to 24.8 roughly. And you can see that the lower second standard deviation of the Bollinger Bands is right in there. And this is what I look for when price approaches a support. So if price does fall to this area, it is right in an area of support by the lower second standard deviation. So you do have to look out for strong bounces or reversals off of the upper and lower second standard deviations. In this case, the lower second standard deviation is coming in at 25K, which is in a very important area of support. So I wouldn't be surprised to see a strong bounce from there. But if we did see a closure below, I would be looking for expansion. In this case, down to around 24.3 to 24.5. And the next area that would become available, not that necessarily that it would get hit right away, but that would be the next weekly would become available if we did see price trading around this weekly at 24.3 to 5. Then I would be looking at the next viable target to the downside at 23.7 to 24K. And of course, I've said this over and over and over again. 23.3 at the monthly is the line in the sand for the bulls. That's what it is. I mean, it's a big fall from there. In my opinion, there might be pit stops along the way, but the next major area to the downside would be the next weekly at around 21.8 to 22K, which, there is some precedent for that. There is the 22.8 area over here with a 22.4 high on a close. And then directly below, we have this rejected weekly area around 21.8 to 22K on some of those wicks. And then most likely another trip down to around 21K. And then that line in the sand for the monthly on a closing basis would be the 20,500 area for me personally. Below there, I think it's a very likely possibility that the major low that was set earlier this year gets retested. As it stands right now, if we do see these two wick highs get taken out at around that 26,100, I would be targeting around the basis band by this close open structure. You can kind of give it a range of 26,300 to 500. Excuse me. Above there, I would be looking back to this weekly at around 26,750 to that upper first at 27K. And that monthly just overhead at 27.2 is going to be very important. If we did see price trade above there, and especially close above there, that would open up the next target on the daily at 27.5 to the upper second around this close open at 27.8. And of course, that would make available the 28K weekly here that was already tested. So that would be a retest. And if regained, we would be looking to the upper third area around 28.4 to 5 by these lows. So, and above there, $20,000, 20,200 or so to the dailies up here at 20,004 to 5. If that was regained, or when that is regained, I should say, it's going to be, I think, game on for the bulls to the upside. Anything below, no, I'll use this chart. Anything below this last low up here, though, as it stands right now, is still dangerous risk for bulls. And that is going to be on a close at around that 29,770 to the wick highs there, just below this other weekly that's overhead at 30,326 if you want to get exact, but around that 30,300 area. Anything below there, I think, is generally sideways for the bulls. I wouldn't necessarily say it's bearish. It would be bearish on any moves up to that area that fail. But I'd be looking for prolonged sideways on closures below that wick high and that weekly up there. We're in an interesting phase where we're getting a lot of infighting in the crypto community about which direction price is going to go. And realistically, I would not really be looking for things to really take a leg down unless we saw that monthly at 23.3 get closed below. On a daily and even a weekly would probably do it, but especially a monthly. As it stands right now, I'm not really looking for too much crazy to happen. If we did see that, then I think it would be probably a pretty good buying opportunity for those that want to get in there and buy some spot. Now, that's not financial advice, but I do think that in general that would be very akin to what we saw in 2020. So we can see the momentum pivot is $27,000 on the daily right now. This is going to pretty aggressively come down in the next closure. Of course, this is the KVDB Advanced Stoke from app.crowntrading.net. Again, I have no affiliation with them. I don't make any money. If you ever pick up any of their indicators over there, I think Crown does a great job with the developers over there who do fantastic work, and I really do enjoy supporting them. They've even helped me with my own indicators. But if you want a free Stoke pivot, there's a few others actually on the indicators tab here, but a good one and a very simple, straightforward one would be this BA Reverse Stoke by Trader Ali, and it's also coming up with the same Stoke pivot. So that's going to be about $27,000 on the daily as it currently stands. And what does that mean? I mean, at the close today, it's likely to come down even more. If we were to see that turning and then Bitcoin puts in a low here, which at this point I would call a low in on a close around this close from the other day at 29. This would be yesterday, not the other day. 25, 969. Nice. Man, we're coming up with a lot of 69s here. I think the traditional markets as well. So everything's turning into a meme at this point. Now, preferably, you want to see closures above the wick highs here at around, in this case, it's going to be 26,142. So about 26,150. Above there, I would call this low set on a close, but it still needs to get through that 26,405. Take out these wicks here, get above that basis, test that upper first, and then take out this lower high. We talked about this prior. If we see this lower high get taken out instead of this higher high up here, which is still a lower high in this trend, it's a little bit higher high than this spike up right there. I don't know if you want to call that a consolidation, double bottom low, or two lows to a lower high. Really doesn't matter to me. In this case, it's a higher high on a wick, still a lower high in the context of the downtrend. And now we have a new lower high, which is a little bit more attainable than getting right up to around 30,300 or so. In this case, the wick high is coming in at 28,184. So 28.2. Above there on closes, we have a structure change. So we would have also some bullish divergence here. This is not the constructive type of look that I'd want to see. What I will note is I've seen quite a few people talk about there being a divergence here on Coinbase, and this was a lower high up here. There was divergence from the range up top, but in relation to the last high, I should say, there was no divergence off of these two. It was a lower high on price action. It was a lower high on RSI, and yet I'm seeing a lot of people talk about this bearish divergence and how they knew it was going to be one, and it's very, very interesting to me because it's not a bearish divergence. Now, if you look on some higher term time frames, it is, but on the daily, it was not. The way that I showed you guys how to assess this was, volume based at the high. I believe this area right here, when this wick low broke on this candle over here at about 1:30 on the 29th at my time, that's when this high was solidified on very high volume. We'll review that later. That was the chance to get short, right? And I actually did take that particular short. I was watching it very closely, and I took profit, within this range, within the volume areas that we talked about up here. And then I left some on and even reloaded a little bit on the failed spike up to then take profit down here. And, we're going to get into a little bit more of that here today. But we do have some pretty interesting things going on some of the higher term time frames in terms of closes. So this weekend, of course, we will have the weekly close. We will also have the 2-week close, and we will also have the 3-week close. And guess what? We're also going to get a 4-week close. So this is a big one. Now, this is all coming right into, the midpoint of the month, end of the month area where we're going to have an FOMC meeting on the 20th. So, some rate decisions on the 20th. And shortly before that is options expirations. I believe it's the Friday. Let me look. Options expirations are going to be Friday the 15th. So, and I believe there is 4 sets of options. We can go and look maybe later. We'll see if we have time. But you can correct me if I'm wrong. I believe there's 4 sets of options. For you guys over in the alternate chat there that can't log into YouTube, you guys would know, so let me know. I believe that's correct. If that's what we've been talking about, that's the one on the 15th. So there's kind of 2 big events. Options expirations towards the end of the third quarter coming into fourth quarter are always pretty big anyway, because of, the quad witching. Don't I watch Crown still? I haven't actually recently, but has he been talking about that? That sounds like a Crown thing to talk about. Okay, cool. So it is the quad witching. It's not, so it's all 4. It's futures as well. Okay, cool. So there's 2 major things kind of 5 days apart from each other. So there's that Friday and then the following, the following Wednesday. So Friday the 15th, Wednesday the 20th, we've got some pretty big stuff coming in. It's probably going to move the markets. But, as I've said many, many, many times before, we're going to be able to tell what's going on before it happens based on our analysis and looking at the charts. What the most likely thing, I should say, would happen. It's not always a given, but today we're looking at momentum pivot is down below $26,000, basically $25,989. This is going to be closing in 2 days. So with Wednesday's candle, or with Wednesday's open, I should say, right? So today, Tuesday's candle, it'll be Wednesday. When we speak again, this will have a new 2-day candle. You can see here that Bitcoin has tested in and around that lower first, which is coming in at that 26,114. Hasn't quite gotten above it. If it does, that would open up some of the areas that we've talked about, this wick over here now at that 26,800 area to the close opens at around 27,800. The close opens on the 2-day actually are going to be a little different, 27,300. And that basis up there around 27.7 to 27.8, which is where that daily upper second, I believe, is. Is that the upper first or the upper second? Let's go double check just to make sure. That would be the upper second, yeah. And we have, we've seen this flip down. It's in a critical area, so everything's facing down right now. So it does favor, more downside and at very minimum sideways. The 3-day is pivoted at 25,855. This is also going to be closing. This will actually close with Wednesday's closure. So this is going to be another one to watch. It is getting a nice sweep into the oversold zone. When this turns up aggressively, that's most likely going to happen on any closures above that lower first at 26,581, 26,6 area. If we do see downside into that lower second, that's going to be at 24,800, right around that weekly at 24,750. And for the 2-day, that's a little bit deeper there at 24,500. So just above that weekly at 24,300. So you've got that 24,750, which is the wick low on the 3-day. And then on the 2-day, you've got kind of that zone where the weekly is down there at 24,300 to 24,500. Where this lower second's coming in. I love those spikes, by the way, into those ever important areas. And that's basically where you see the impulse through the lower second and third or upper second and third. And then you see things come back down and test around the lower second or the lows. In this case, to the upside, it was test the highs here, even get a slight closure just by a couple dollars over that high. but then immediately rejected. And that was the 31.8 tap on that really big monthly overhead. That, like I said this running up to that 31.8 area. Many looking a little bit up, further up. That was a daily, weekly, and monthly closure, so that's a big one. You know, it would be a little uncharacteristic for Bitcoin to not try back up when looking at the 3-day here before trying down, but that's not a given. We could see things kind of float their way down, sweep the lows, and then head back up. If we do see some sort of a hellacious dump, it's going to be a big candle, I think, past that 24,750 low over there. And it would have to be on a close, not get bought back up. Otherwise, it would just be wick fishing. The 4-day still set up in a range here. Lower second down there at that 25.3 to 400 area. The lower first still settling in around that 27 150 to 27.2 area where that monthly close open is. Basis up there at just under $29,000. So there is some daily lows in there. Basis on the 4-day gets tagged. Then we're looking for those highs to get ran, that 30,000 with 30,300 to the upper first at 30,500 to 800 or so. Now, the 4-day has entered the oversold zone here. It's not fully in there, just the K read is. 26,500 would give this an initial cross back to the upside. We would need to see the subsequent closure for confirmation of that. So, the 5 days, another one. Very much a range look right now. It is a widening range when looking at volatility here of the bands, where the lower second is coming in just below this wick low at 24,400, just above that weekly support. And on the 5-day, there is actually a support that closes right in and around that area at 24,300 as well. So I believe the 5-day and the weekly are in the same position there. 5-day headed down on any closures below 29,605. Did not get quite the rundown in the momentum pivot that I expected, but if Bitcoin hangs here for another 5-day closure, I do suspect that we're going to see that drop very aggressively in the next closure if Bitcoin can hang sideways. So, and when I mean sideways, basically not losing that 24,750 on a close, that wick low. If it can hang in here for a little bit longer, it's more likely to initiate a bounce. The weekly is also going to be down below 29,120. And the lower second is now slightly below that wick low, coming in at 24,673. You can see that it was tagged. Bitcoin's just gone sideways since. Lower first area to regain for the bulls there at that 26,400. Basically that close open high within the range before the little pump up to where the basis band is. On the daily there, basis band is right there at that 28,100. This was a perfect basis band tap, by the way, last week before the move down. I know we did look at that. Excuse me. And of course, above there, target any closures above the basis would set a low on the weekly. And in this case, the upper first would be the initial target right there again at just around $29,000. The 2-week, as we head into the end of this week, is going to be something to watch. It's at $30,000. 3-week is at $29,000, and the 4-week is still pointed up above 21,600. So this is going to be an interesting one to watch. If Bitcoin can hang on to that basis on the 4-week, which is right around $26,000, if it can maintain that basis on the 4-week, then that would favor, this is going to move as well. So Bitcoin trading like right on it does mean that it's likely to head down and or sideways and maintain this 26 to 25.5 area. And we will see the lower first and the upper first kind of track most likely sideways. Maybe the upper first comes down a bit there, and that is at $33,000. I suspect on the next closure, it's going to come into a very important area that I've talked about previously. If Bitcoin were to regain things to the upside, that above the 31.8 spike high area at this daily, weekly, monthly level. We did run this area already, but just above it, there is daily overhead resistance at 32,400. So it will be interesting to see next Monday if Bitcoin hangs sideways here and updates where that upper first heads into. As I do think that more or less we're seeing Bitcoin kind of range around in a transitionary period on the macro. I'm not necessarily looking for a dump out on the monthly, but as I've said, the monthly is in a very important area. 22,230 is the momentum pivot, so dropping 23.3 at that monthly would start to endanger the momentum pivot on the Stoke. Thus, could be leading to much further downside, but we're trading above that right now as it stands. But it is something to be aware of that the last time that we saw Stoke head up into the bullish control zone, around the 60 to 80 read here on a regular Stoke, not a Stoke RSI, that it did reject. And this was back in 2019. We're not seeing the same type of aggressive move to the upside, though, that we saw in 2019. So I do think that this would be a little bit more of a traditional transitionary period on the macro, where we could see things flip around. But the end of this month, the quarterly is going to be the big one. 31,328. Wherever that pivot ends up is, going to really dictate the look of the fourth quarter heading into the first quarter of next year. So let's go ahead and jump down into some review of the volume-based swing fail stuff that I talked about last week, because I got a ton of questions about this from various people, and I've even gotten some requests to do a full dedicated video on this. I will. So just to review, when I was talking about this on Friday and we reviewed kind of the anatomy of the dump, there was some pretty clear areas to define on the way up. So we had, prior to the actual run up, we had a nice little high volume breakout candle right here. And it kind of defined the expansion on the 15-minute if you had Bollinger Bands on. And then the very next candle was an extremely high volume candle. It was the highest volume candle of the move, and that was this guy here. And when looking at this, you mark the, well, I don't want blue. Let's do yellow for the closes, and we'll do, oh, that's why it's not working for me. We'll do yellow for the close opens, and we'll do white for the wicks. But next candle was the highs up here, and the next highest volume candle up was the actual high. So we did have a nice high volume candle just above it. So you can mark that one if you want. I didn't when talking to you guys about it before. Then we've got the close open here. So what we'll do is we'll actually move this to the two highest volume candles, or what I identified as the most important ones. And this was the swing fail up here. You could see that all these different 15-minute candles did not pass this area. And then we have some wicks here. So this was defining the bottom side of the range. So this one high volume candle defined this bottom, and this high volume candle, it was at least the next highest volume candle that actually put in a swing on a close. And in this case, that close was right here on this wick low. I'll mark it in a teal trend line here. This wick low, when this closed below it, we saw the retest. This was the actual swing fail locked in when you're looking at the 15-minute chart. You will get some that would have taken it right here on this close because it closed lower than these last two areas. There was a little order block here as well. And then there was this closing low that was kind of holding things up. That would be your early entry. I like the wick low entry. It was also retested in about an hour's worth of candle price action here. And then we saw the range get defined. We see that came back down and entered this more of a liquid zone. we did see some areas of higher volume, nothing that equaled what got everything in here. We saw some high volume on this spike up. So, I mean, you can define some of these areas, but this was a low and this was a high rejection. And it was all within the context of this wider range. Now, you can take and just use traditional methods to figure out that this was a good short right here because it closed below these, this little consolidation high right here, wicked into it. It even hit this low right here on a close and then reversed. And, you know, you can take the little step downs here and there, but the real breakdown didn't begin until this high volume candle close right here from the move up was breached on a close. So that is what kicked off quite a bit of volume on the way down. And the easiest way to track volume on the way down was to take this wick low and start defining the areas for continuation. So if you want to see like, okay, I want to make sure this isn't a swing fail, right, of this low side structure, this higher volume move up, and I don't want it to be a deviation that comes right back in. You take the wick low to the close of that higher volume candle, or the highest volume candle close to whatever wick low that closed back inside of it. That's kind of what you want to also keep in mind. So there is a bit of criteria that you have a little bit of leeway with the criteria there. But it closed below it, got continuation, and we saw higher volume candles on the way down for continuation here. And when we saw this particular highest volume candle here close, there was this high volume candle right here. And then we have the next candle was also a high volume candle. So you can mark these. And this was the highest volume candle on a wick low that we had seen at that point, up until this next guy here, which has a wick low right here and a close. So as you're tracking it on the way down, each high volume candle that got closed below, like this guy here, gets closed below, continuation, but it was on higher volume down here, step it down, this closed below there, so continuation on the next candle, and then we saw a bit of a stopping point. So then we can mark that area for a potential setup on the swing fail side of things. It did not, so the next area would be this guy here, and you can see the close open right here is right on this wick low of the highest volume area so far to that point. And then we get another failure, close below, wick below this guy here, and even close below. Now, in this case, we did see it regain this wick low and then start chopping sideways, which did constitute a swing fail. But because we saw expansion in the higher term timeframes, you don't really want to take that just yet until you see a strong reclaim of this close open right here around that, in this case, would have been 26,332. Next candle down, by the way, did have a nice close open swing fail area as well. And this was, an area that did, when we saw this swing fail, so it deviated this wick low right here. Let me get the, so when we saw this area right here swing fail, we saw the wick low on pretty high volume get put in. It did close open right below that wick low and then regained it. Now, the thing here is that's not yet a swing fail because it still needs to regain this prior high volume low. And it needs to regain it and then hold it. Preferably you want to see retest. Some people just take the reclaim of it. But in this case, it chops sideways and then we see another drive down, but it holds this wick low. But it rejects again around this wick low. So we see it step down, wicks below this wick, but closes inside. And then when we do see the closure outside of it, we get the final rundown with very high volume on the actual low. So this is kind of how you can gauge continuation and swing fails. Now, the beauty is you can mark this guy here, right? So we got that wick low because it was higher volume relative to what we had been seeing running up to it. And it was higher volume than the red candle here. So nice buyback, but it did reject right away. And this is the beauty. So now we have some structure built. So when this low is put in, you know, a lot of people probably trying to catch the low, which is not necessarily the smartest thing to do, is try to knife catch. But in this case, you can see there was a very, very clear area to long. And you use other confluences, not just swing fail pattern, not just volume. You use things like, you know, divergences, trend. Well, it should be trend first, but this would still be a downtrend. But we did see right here, we saw a little move up, and we saw what? We saw this wick low hold. That was a good long opportunity. We see that it moved up, regained this low over here, and let's do this. So this here was a retest of this wick low. Good scalping opportunity. This is a low set. Target would be this guy here, and that's your first target, would be that high. We see the low was already tested. So this low was already tested on the wick before it. Comes down and holds it. So this is a good opportunity to take a scalp to this high up here, to this zone between this close open and this wick low. And we see that it did get fulfilled. And then the next big area would be this area up here. So we look to the right here, and we see that this area on a swing fail was swing failed 3 times right around this wick low. This is your generalized area. This was already retested, by the way. So that's why these, even though they are higher volume rejections, because this wick low is what defined this little range here, and has been retested and rejected. There's no need for me to mark these 3 lows unless you want to, or highs, I should say. Those are not lows, those are highs. Silly me. Sorry. But what you can do is like use a different color if you want to define like, hey, this was a really high volume relative to what we have been seeing, but it's also already been marked by this area here. So if this is regained, then yay, we look for it to move up to that 232, 300 area. And then we see on the other side now, there is a little bit of a higher volume low relative to what we have been seeing, but it's all within the context of the areas we've already marked with much higher volume. So in this case, we can just say, okay, this is kind of our criteria here, and it's kind of hanging out in the mid zone, right? And if you want to get really granular, you could say there's a tighter range right here and a tighter range right here, but realistically, you're just making more work for yourself. You could even argue that this little high volume high, this was a deviation, and then this was a deviation of this low over here. You can get really complex with it, but there's no point. It's already marked to the left of our chart with much higher volume. And those are the areas that are really going to matter, because when you break through those high volume areas in the order books, it's going to go liquidity hunting for the next big areas of interest. So within the range, things are going to bounce around. There's probably not much. There was a little scalp off the lows, off the spike and reclaim of this wick low. And then you take profit here, you take profit up around here. You know, you can use your judgment. You don't have to take it right on the high. You could take it on these highs right here that just got swung 3 times. You know, that kind of thing. Same for a short from here to here. You know, this area has been swung a few times. There's lows over here. There's a low right here. There's a low right here, and it swung and then reclaimed. So, you know, good short exit if you're scalping a very tight range. I don't necessarily suggest it. All right. That's going to be it for Bitcoin. Are there any questions, any specifics you want me to get into regarding the volume-based swing fail patterns? I hope I explained that okay. And the reasoning why I'm not just marking. Oh, this is the other thing. When you see high volume candles, for instance, I don't bother marking the tops of them. If it's on the way down, I mark the lows because I'm looking for continuation and then a swing fail that defines the range. I wouldn't mark the tops of any of these candles on the way down because they're just not as important when hunting for swing fails. They aren't going to define the range. They're going to define the stopping point at some point, like the low down here, and then they're going to act as resistance. All of these lows first on the way back up will act as resistance. The highs would come after. they're not as relevant as the lows. So that would be the other thing to kind of touch on there is there's no sense in marking these high side of these down candles because it's a downside move. When it swing fails, you work your way back up on the lows as horizontal resistance in this case. I hope that makes sense. Anybody? So yeah, you guys over there are good in the alternate chat here. Cool. Yeah, if there's a few of you that got to bounce after that, because we already talked traditional markets earlier today, that's cool. You guys aren't going to be in until tomorrow anyway. For you guys over in YouTube land, anybody have any questions? Let me know on this. And if not, I'm going to move on to traditional markets here. I will actually, okay, we can call out a few more things now that I think about it. Now, in the other chat over here, they mentioned the trend lines. So there is, you can use trend lines, but they really, in my opinion, need to be supported with horizontal support structures and resistance structures. But yes, there is a trend line that was tested from the lows here. That was this low to, I believe, this guy here or around here or something. The thing is you can make the trend lines whatever you want, right? So, there's from the lows here on a close, like it tested basically this area here. So you could draw the trend line to fit, right? And so yeah, I mean, could it be it's a trend line rejection? Sure. But it's also confluent with horizontals. I mean, there's overhead resistance over here, and over here, and over here, close opens, all kinds of stuff, right? So there's all kinds of closes in here. I don't really play the trend lines unless they are confluent with horizontal support and resistance. Are they interesting? Sure. Can they give you a different perspective? Sure. Is there a trend line from the low? I've seen people mark this up, and I'm not really sure what they're doing, but they're taking a lot of liberty with the lows here. If you're going to take the wick lows, mark the damn wick lows. Don't draw it the way you want to see it. If you're going to take the actual lows, this is going to be the wick low trend line for this guy, and then you can basically spider line it from the next low if you really want. Then there's this guy here that was, these two lows, and like, oh, there's the breakdown right there, and it was retested here and held, and like you can do all that if you want, but trend lines are called trend lines for a reason, right? I mean, it did break the trend line, but it did not break the actual trend. In this case, you could even take this low to this low here, right? And say like, okay, has it retested any of this yet? Any of these upsloping trend lines yet? No. I mean, if you're going to take the retest on this, and for those of you on YouTube, this is a question from one of the other chats. This was your breakdown right here. If you're going to use trend lines or spider lines or whatever you want to do, this isn't the right way to do spider lines, by the way. But you can draw funky lines everywhere on the chart. But in this case, this breakdown was based off this rejection up here, and then the actual close below these wicks here. And this was the lower low close. It closed below these wicks, opening up this guy here at 28,500 into that daily support. And then that was the 28,500 to 28K region. If that breaks down, we were going to flush. And that's exactly what happened. So now you can do this, but I will tell you that trend line breaks and reclaims are not, I would not be trading based off of them. I would be using other confluent factors. Are they nice to look at? And can they be confluent with some of your other, analysis? Yes. If it is confluent with your other analysis, then by all means use trend lines, but do not use them as your sole analysis crux or thesis or whatever it might be. Yeah, so, but yes. So to answer your question simply, after answering it a little bit more complex, the answer is yes, it was a trend line rejection, but you got to kind of draw the trend line to fit. If you were to take closing trend lines, it's not going to fit, for instance. But if you're just to, mark it up with lines across the screen, generally, they are going to line up and have confluence with your structure, especially in trend. So let's go ahead and look at traditional markets, see how things are going over there in traditional market land. Oh, they're not open. That's right. But futures is open. So we can look at futures. And we've got... Wait. I know CME's open right now. Are we not... Yeah, so it is open. We're not going to get a countdown? Interesting. Maybe it was like a half day or something. I don't know. But CME was open. So there's actually not too much to make with traditional markets today. We'll just have to wait until Wednesday's stream. Just to quickly review the daily. Daily still up above 34,200. That is going to adjust. The big 2-day there may turn. It's probably going to head down. It's not going to turn until we see closures above 34.5, but this is going to head down, I believe, on open. We'll have to double check though. So it was mid last week when we had the close open on that 2-day. So I believe it's going to be Tuesday or Wednesday. It might even be Wednesday when we have the other live stream. So not too much going on with traditional markets. We can take a look at commodities as well. You're not going to see too much going on except a bear div populating here on gold. I would say that this is likely to confirm. It doesn't mean much until we see closes below 1934.52 and the upper first here. That's where I would be looking for a rundown into like 1930 to 1932. If it loses that area, bearish divergence plays out. We're looking back to the wicks here at 1923 down to the basis and low side structure at like 1915 and 1920. Not too much to make on gold there. Below 1930, that would be a momentum shift on the daily, but I would be very careful about that because the 2-day is pressure up, the 3-day is pressure up, the 4-day is going to turn and be pressure up above 1930. So you can see everything. Excuse me, everything's coming in to that area at 1930. Sorry about the cough. Right into your ear holes. Yeah, 1930 is kind of the pivot there. So you do want to see it kind of hold that area. If it does lose it, we will see momentum shift. So 1930 to 1932 around that upper first. If it can hold that area, great. And if it can even come lower as long as it's regained within those other higher term time frame pivots. So the 2-day I do think is going to be pressure, further pressure up, and that 3-day as well as 1897 would most likely give the 4-day, which has an initial cross. I think once this is a completed cross, that number is going to drop at that 1930. So in the immediate short term, you don't want to see that area necessarily close below, but if it does, I'd still be looking at that 2-day, 3-day as pressure up, and I'd be looking for support on the way down for gold. Not necessarily a reversal. This is still a pretty strong downtrending structure. We need to see at minimum 1985 to 1990 broken. Dixie. So Dixie's trading. Dixie, I do think, might be putting in a little bit of a double top here. And that is not confirmed by any stretch of the imagination. It is just trading a little sideways and down right now. But if I was to not use TA and just look at structure, this looks like a bit of a lower low here in comparison. Technically, the last real lower low is all the way down here at 102, but a little bit of a lower low trend break. We have a little bit of a higher high, but maintains inside of the wicks here. If it does close below, for instance, let's say it puts in the candle like this today at 104.02. If it were to close tomorrow's candle below it, and the upper first here at 103.93, then I'd be looking at this as a high put in. Probably see bearish divergence there as well. So there would be bearish divergence on any high put in here, but that'd be a short-term top, at least on the daily, and that would probably bode well for traditional markets and by contrast Bitcoin as well. But it could very easily still run the upper second here at 104.44 to that overhead resistance at this wick high at 104.69. Nice. And if it did that and broke through, I would be looking for it to leg up to around the 105 to 105.50 region, and eventually that 106 area, or just under it here at that 105.88. That would be the next big area to look at. That'd be the big swing fail zone that I'd be looking for, at least in the longer term. And in this case, I mean, the 2-day is also headed down below 104.21, so it is going to be pressure down. Little bit of an RSI divergence there. We haven't really seen a confirmed high though, but you would see a bigger bearish divergence form between these 2 points, right up against this bullish control zone. That would be a valid bearish divergence, even though I don't think this indicator would call it. But right now, I mean, it's, it locked in a high and locked in a low in the same area. So it's either going to push up or it's going to swing fail and then head down. The 3 days, I believe, the only outlier here that's still headed up, and it's very close to its momentum pivot. And you can see the 3-day is set up in basically a pretty large range, with the upper second being the main reversal area right at that overhead resistance at 104.70, 1 penny above the magical number there. And to the downside, we've got the lower second, third area that is a reversal zone. But you can see, because it is set up in a reversal zone, it encompasses that high that we talked about on the daily and 2-day area or chart. The 4-day is still pressure up. 5 days still pressure up. Weekly still pressure up, right? If it does start to put in a high here on the daily, that's when the weekly starts to get interesting, and over the next 2 weeks heading into mid-September. So around the options expiration and then the FOMC. So if we did see this start to put in a high here, and especially take out the low at 103, that's where Dixie gets really interesting and gives us the idea of what might be coming for markets from the Fed and interest rates and stuff like that. So when Dixie turns like that, generally it means that the market's probably prepping for maybe a pivot, even if it is a soft pivot, and or liquidity within the markets. So we'll get into that. The programs that the Fed is using to basically silently bail out the banks on Wednesday. I do want to talk about this with you guys because I do think it is relevant to understand, and some of my theory and thesis as to why. So, all right. Yeah, that's kind of it, guys. So if anybody has any questions or anything that they'd like me to look at, I do have a little bit of time left over, because there's no sense in looking at traditional markets right now. Futures can do what they do. We'll check on it on Wednesday. Just be aware of the areas on the main indexes coming into open tomorrow. So I will turn on the music here. I'll give you guys a chance to catch up. And when you do catch up, if you have any questions, please go ahead and ask. I've had this freaking gaming mouse is so boss. I've had it for so many years, and the mouse wheel is squeaky, and no one's ever said a thing like, "What's that squeaking in the background?" It's my mouse wheel. And I just love this mouse so much. I have other mice. I have newer mice. I just really can't not use this mouse. So I do apologize about the mouse squeaking going on here when I am scrolling. So let's go ahead and turn on the music here. We'll get this rolling up, a little bit of background music while you guys catch up over there. For you guys over there in the other chat, so you guys are in the office today. You just can't get away. You're trading futures, aren't you? Okay, that's why. Because I was going to say, why don't you come join me over on YouTube? I could always use the extra views there. But you are in the office. Okay, cool. Yeah, trying to get ahead of the game. Look at you go-getters. Look at you guys. We see it's all good, man. Yep. All right, let me look back here in the YouTube chat. Are you thinking Beverly Hills? Oh, you're talking about the music. Yeah, it is kind of that 80s synth wave is very much associated with many of the movies that you guys have described. In the air tonight. Next time, In the Air Tonight should be included. Yeah, I don't want to pay the copyright, and I don't know which services actually have some of that licensed music that I could actually use. So, Bobby says, "What do I miss?" That was a while ago. Not much. I mean, I think you came in right when I was getting started. Yeah. So with bull bands. So I got another question over here. Yeah, with bull bands and BBWP, you can still use that within the swing fail pattern area. So I'd already marked all this up. Down to here. So this area was already marked up. The teal is just the local stuff that I was looking at. These other ones are the same. It makes for a mess when you have the bull bands on, but you know, it's the same thing. When you get into some of these areas of resistance, you know, it's by the upper second and third area, right into resistance after swinging this area. Again, move down, lower second, move up, swing around this area, swing fail, and then head down. Trend down, little bounce off the lower second and third. Wick through the lower second and third, reverse sharply to the upper second and third. And then you can see that it marched its way up, swung this area, now it's headed back down. Combine that with something like, you know, a Stoke just to check the momentum pivot where it is in its charting. In this case, headed down below, you know, 25,900. So, you know, but if it sets a low here, then it could head back up and start trying to expand above. You know, this white line is a wick. The yellow line is the close. So this is the close, this is the wick, so it's in between these two high volume candles again. You know, so, and then you can throw on volume and just make an absolute travesty of your charts. And you can see that relative to what, you know, the volume that we have seen, this is high volume on a low, this is high volume on the high. So we have, even though this high volume on a low is coming in, there was also high volume on this low over here, and so on and so forth. So yes, you can mark it, but the main areas, the most relevant areas when you are marking out the swing fail and continuation on volume for the candles is going to be, in this case, I'm using the yellow as the close and the white as the wicks. And then the teal is just me going through and just doing short-term price action, support and resistance in between those, or within the range, I should say. So, but yeah, you could totally make a mess of the chart if you like. Yeah. Okay, so the new soundtrack intro. Let's see, we'll go to the 10-second chart so I can read a little bit more here. Ugly 10-second chart. Look at that high volume 10-second low. When it was reclaimed, it was up, up, up. But it's now hovering around this high right here. Yeah, look, you can do volume-based swing foul patterns on any time frame. Yeah. All right, so yes, I played the David Attenborough stuff, Bobby. I'd have to actually go to another YouTuber's account. I believe they have the full one.
Welcome to the world of me.
So I think I don't think this is the actual person that uploaded this.
Welcome
Yes.
to the world of meme coin trading.
Let me see. Let me go on my main feed with my speakers. Yeah. I don't know if this is actually going to show up for you guys though. Because it is a pretty brilliant.
Welcome to the world of meme
just
coin
re-uploaded
trading. A hobby, if you can
I
call
don't
it
think that it's actually
where the
gonna
main
show
objective
the,
is to
video
not
capture
get
though.
rugged. Here, fortunes are won and lost in an instant.
Let's see.
Will it be pot noodle tomorrow
I'm looking at my
or a
feed right
lobster
now.
dinner?
But yeah, this is
All
what was
part of the
playing
thrill for
in
these
the beginning.
complete morons.
Pretty darn funny.
While most traders spend their time on centralized exchanges, the real degenerates are found on Uniswap, a decentralized exchange where anyone can list any old shite. If you want to make real money, you need to be early. Really early. And these clowns know it. That's why they're glued to their screens, searching through the depths of Telegram and shitcoin Twitter. On hand with their grandmother's savings, ready to strike at the first not too shit-looking project they see. $200 buy-in with $50 for gas. The future of finance indeed. On this particular day, Elon Musk has just tweeted about having waffles for breakfast. And so it begins. Waffles, Waffles Inu, Waffles AI, Waffle Doge, Waffle Pepe, Harry Waffles, Obama Sonic
Harry
Inu.
Waffles, Obama Sonic
All
Inu.
launched within the first 10 minutes. Panic for shitcoiners, which token will be the one to make it and which ones are the rugs. Unfortunately, the worst has happened. Even though many of the projects weren't honeypots or rugs, Elon has tweeted again. This time about his new pet snail. Every meme coin trader knows that Elon's tweets about his pets trump any generic breakfast tweet. As the liquidity floods out of Waffles-associated coins, our early buyers are left with nothing. $250 down, and it's not even lunch.
Probably
not a terrible start to the day for a shitcoiner.
Scam account or something along those lines. 2 subs, lots of videos about NFTs. Probably a scam account. But yeah. All right. Well, I guess there wasn't as much for me to talk about today as I thought. If there is anything that you guys want me to look at before I head out, let me know. If not, then I'm going to prepare to get rolling. I'm going to give you a minute to catch up if you have any requests. You have a request, Bobby? Okay, for you guys in the other chat over there that aren't in YouTube, if you're going to head out, I'm going to shut that stream down. Thank you, sir. I appreciate it. Ah, the good old BLZ. All right, let's take a look. Let's take a look at BLZ. You want the Bybit or the Binance? Probably the Binance if I had to guess. Looks strong. Possibly putting in a high though if it can't get past this wick high and a close. I think this has gone right to the areas that we spoke about. Yeah. It did. It ended up going to some of the areas that we spoke about. You know, it's not that sentence right now. Nice arc to the basis band. A bit of a consolidation probably in store. Momentum is up above 12 cents, 12.5 cents. And it's trading at 13.1. Now, of course, this rejection doesn't look great after sweeping this high and the higher high up here. So, swept the wick. And in this case, not the best look. But if it can maintain closures above the, I would say, the low side structure here and avoid hitting that lower first at 10.4 cents, then it's probably looking good to keep trying. Maybe a little bit of consolidation on the daily here. I do suspect this is going to depend on what Bitcoin does. You can see there's a clearly defined wick low bottom here at around 9.75 cents. So below there, I think it would run the lower second at 9.2, and it's still got room down to around the lower third at 8 cents on a close. So that's kind of the way that I would be looking at this area. You could take the close open as well. Closes above there, might push it up against this wick again and its current wick high. But I'd be looking for it to actually get a close above that wick high. So I'll only mark that at 14,950. And, you know, the bearish divergence is there on any high that's put in. So, you know, this is quite a run up from this guy here, this wick high, which, you know, did act as some resistance. I would expect it to act as some support. That is the highest volume daily candle right there. So you could even move this guy over here, give it a little bit more room. And you've kind of got a big daily liquid zone. You see that it was bought off that area on higher volume as well. We saw the high volume rejection to the higher low. So, and this is after it being dead for a while. So I would say between 8 and 15 cents or so, probably going to cap things for a while until we see a breakout above 15 cents or below 8 cents, which would be a breakdown or a breakout to the downside. I mean, this is a pretty strong rejection on the daily. That doesn't mean that that it doesn't, you know, push on through in the next couple of candles, but this wick high now is going to govern things, and you can use the wick high to the left or the wick high of the current run up, which is 15.213 cents. So from the weekly perspective, you know, it is above the upper second currently. And that pivot's going to be 7.62 cents. So, you know, it's looking good for continuation. You can see on the weekly where there is a clear swing fail area. And, you know, it wouldn't be much of a surprise to see it pull back from this high area at around 13.8 cents or so. You know, if it does start closing below the upper second, then guess what? All the daily areas that we just talked about become more relevant. Upper second is going to be right there at 12.45 cents. There is that support there on the wick and the daily. Next area I'd be looking is the upper first, around 9.5 to 10 cents. Below there, we're looking back to the wick low, which doesn't line up with the weekly for some reason, to that basis, which would be a fail. And that basis coming in about 7.3 cents or so. So nothing too crazy. Below 7.3 cents, it's likely to head down to 6.5 and 6 to 6.5, and then maybe even this low down here at 5 cents. But that's a line in the sand. Takes out this last higher low. It's looking for a dive, probably much deeper. But as it stands right now, it's trying to reverse structure. What I would like to see is a nice high put in soon, and then a higher low, and then March. That'd be the preferable thing from the weekly if I were you, and I was trading this. Then that's what I would be looking for. But the areas that I just defined are the main ones. The divergence. Look, there's divergence here. It's whenever this puts in a high, there's going to be divergence. Now, will it be divergence on a close? No, because it wouldn't be a higher high close than this last high up here. But it would be a higher high wick divergence, and there would still be divergence based on this close back here, which is that 9.635 cent area. So whenever this does put in a high, that's going to be the governing factor right there. But it is still making higher highs, and so far higher lows, so it looks all right until then. But yes, take the I would take it on the daily, one step at a time, and wait for confirmation if you're trading the longer term time frames. Trading Matic, I could take a look at Matic. No problem, Bobby. And then Bobby wanted to see Pyre. PYR. Let's go ahead and take a look at Matic. What is Matic doing? The last I looked at Matic, it did not look healthy, and it has been a while though. What do we got here? Matic on Femex, Binance. It's a USDT pair. Yeah, this is ugly looking. Could it be setting up for a long-term low? Maybe. This is ugly as hell though. 58.1 cents. Trading at 55. There's no low set here. It could try to set a low in and around here. So let's see, what's this close? This close, or this open I should say, is at 54.96. So if it does close here, it would be a technical low set, but I need to see the wick high closed above at 55.38. And then I would be looking for this to be a low set. Is there divergence? Yes. Is it ugly as hell? Yes. What does a 2-day look like? Ugly. 545. So 54.5 cents. Trading a penny above on the 2-day. That's still some time. It's sitting below the lower first. This would set a low on the 2-day here. We haven't quite seen a low set just yet either. But this would set a smaller low. We would see divergence as well. This is long-term divergence. It is up over the moving average. So, if it can push up, it might take its time, but lower first is at 55.34. So basically the wick high. Above there, I would look for it to trade up one step at a time, 55 to 56 cents, 57 to 60 cents, and then eventually target the basis if it can recover and close above that lower first. The basis is at 61 to 62 cents. You could take that as a range around this last wick high. From the 2-day perspective, around 60 to 64, 65 cents or so. Putting it back above the basis would start to look very good to go test, much further up around 66 cents. But as it stands right now, it's really ugly. Lower low in the weekly it's got to get that close above that wick high at 63.72 cents to really set a low, and set a low on divergence as well on the weekly. Get a nice drive of bullish divergence, I believe. Yep, there would be a drive of bullish divergence there. You're going to see a low being set on any weekly closes above 55 cents or 58 cents, depending on your indicators. Some are more aggressive. I'd be taking the 58 cent close on the technical low, but still need to see that 63 cent area taken out on the wicks there. Otherwise, it's kind of range bound on the weekly. This is ugly if it does lose this area, by the way. It's headed down to somewhere around the lower second. It could still just run this low at 50 cents, but if it loses that, 45 cents is going to be the big area on the bands, and that does line up with around this close open and weekly order block from this reversal on the weekly. So is it setting up for a possible low? If it holds this wick low, yes, but it's too early to say. But if it holds 50 cents, it can set up a low on divergence. So that would be kind of my take on it. Lower term time frames I don't think are worth looking at this. The daily is giving me everything I need right now. Anything below its last low, and it's going to run this low. So down to the lower second. Right now it is setting up for a possible low on the daily though. It may try to reverse, but it is ugly as hell, and it is a downtrend. So even if it does reverse and put in a low, I think it's got to take its time to chop around and create some good structure, and then try for an uptrend. So far it's ugly. And let's go ahead and take a look at PYR. Well, at least you're picking the shit coins that are trying to break out, Bobby. But I mean, this has been down, down, down forever, and no problem. I would tell you right now, this being this ugly and this range bound with the rejection at these highs, there's a couple of highs in here, and this last rejected high was high volume. This high is higher volume, so this is what I would say. Above 4.60 cents, so $4.60 even. I've been reading pennies, so still trapped in that. Above that $4.60, looking for continuation to at least, the $5 to $5.50 region, or low $5 region, right around these highs. But as it stands right now, this is looking very much like an initial rejection. I would just watch it over the next few days. If it can start closing above there, above 460, then I would look for it to, maybe even it throws wicks up to those, up to the $5 area or something and keeps closing below. I don't really have an opinion, but it's ugly. Now the daily does say that it wants up more. I will look at like the 12 hour. 12 hours, $3.76. It is pinning out, but it's above the upper second. So I'd wait for something like some of these lower term time frames to really start reversing and breaking structure. 4 hour, even though it's turned at 424, it's okay. It's still fine. It's fine all the way to 330. It's still fine, because structurally this could be a mean reversion all the way back there. If it doesn't take out the low, it's likely to bounce and or get a lower high, and then you go from there. If you didn't catch this particular short position off of this higher volume high, the swing of this high here and then the straight up rejection, when it is currently trading right around this high. So if there is support held here, great. And you can see the last higher volume rejection, it just came down went sideways for a little while and then tried up again. So unless this is going to reverse and start reclaiming, 350, this last little spike high, 350 to 360, then I wouldn't even look at the lower first playable at 330. But, if it did start losing, or, you could even go the 15-minute time frames. Ugly, but it's a consolidation. From the move up, here's how you could play this when looking at volume. This is the area that if it drops it at 394, it's likely to go test these lows just below it, because the close is right here. So between 375 and 394, if that area is lost, it's probably over for a little bit. But it can still, it's got a wide range right now because of that volatility. So, and again, you can mark this in yellow for the close, white is the wick, and then you could keep the other higher volume guy on there if you want, or you can just use the local volume because it's already kind of tapped that high volume area. It doesn't really matter, but then we've got the swing fail area up top. And you've got a pretty well-defined range, and there's some pops of volume in this range. You see after this higher volume rejection, you see that there was another high volume candle right into that rejection, and then that was your short position. At least to ride it down to back to this low, which it did just fill that area around $4. So, I mean, technically you could take the 453 to $4. That was the main short there. And right now it's ranging. I don't really see much of a trade until it either breaks down or breaks out, or puts in another high volume rejection or support hold somewhere along the way here. But easily defined range here. You could see how this interplay with the volume on the breakout. Continuation holds, gets continuation again, rejection, and now it's in between two pretty high volume areas. So you've got yourself a pretty well defined area for criteria of a breakdown. And because it is a wider area, if you do want to range trade it, there's probably pretty good range trades because of the volatility. Especially because that volatility has now ticked up quite aggressively on the daily here. So, and it's chasing, moving average is chasing, which normally, when you see a setup like this with, moving average chasing like this, it's probably going to try, the top side more than the bottom side, at least initially. So, and being above that $4 region, which, did test in this daily already. Before trading back up to 418, and it's just shitcoin, so it moves really quick. Typically, when you see this high volatility like this, it tries the highs a few more times, but to each their own. You got to know your coin, and you should study this coin, which I'm sure you have, in order to ascertain that. Hope that helps. So what do we do? BLZ, Matic, and PYR. I think that's if I haven't seen any other requests. I did shut down the other chat as those guys had to go. Did you say no? You did not. I'm not sure what you're referring to, but or if you had any more questions, or if you did not take a trade on it. I don't know. Do your research on it. No, you did not. I did not actually look at the left of the chart, except for that one wick. And I said, that's a rejection. And then I FOMO'd in at 123x. And now I'm rich. I did not study this coin. Okay, there's the confirmation. I looked at high volume to the left and said, I'm shorting this on super degen leverage. Peace out. That's confidence. Some might call it something different. Something different, rather. But we call that confidence. All right, guys. Well, I think that's going to do it then. I don't see any other requests coming through, so I'm going to wrap this up. I will have a Bitcoin in 60 seconds video out, of course, later today with the updated Bitcoin areas of interest. Obviously, support and resistance is going to remain the same, but the bands will move, and we'll see where they end up. It should be a pretty interesting close open coming off of the weekend here, as we do see compression in play here. Now, we can see that the moving average, the BBWP is up over the moving average, but until we see a closure below lower first, lower second, not really looking for expansion, or the upper first, upper second. So lower first, again, is just to wrap this, is 25,650 for today. I suspect it's going to be around that area, 25,650, 25,700. To that lower second here at 25K, which I do suspect is going to be somewhere around 25.2 to 25.3 at the wick lows at this next close, or the close of today. So I'll update you guys on that in the Bitcoin in 60 seconds video later today. Go ahead and like the videos, please, if you are going to watch them. That really does help. I noticed that the last few videos that have gotten more likes have gotten many more views compared to lately. And I'm not really sure what's going on with the algo, but on YouTube, I'm not really. It was rocking and rolling for a while. Haven't changed much, and I've seen a lot of people in the crypto space kind of saying, like, yeah, their views kind of tanked on YouTube. Some of that could be part of the, the stage in which the market is in during this transition. So that could also be it as well. But likes and comments do help. Keep your comments on topic if you can. That does help. Otherwise, it just looks like spam, and the filter will remove it. That is not my filter. That is YouTube's filter. So they do have an auto mod style system. So if the comment isn't relatively on topic, it will remove it generally. And I don't get a notification of that. So, all right, you guys have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. Hopefully by Wednesday, my voice will be totally back. And I'm going to leave you with a little bit of turned up tunes here. We'll see. I don't even know what's playing now, but I might even give it a listen here in the last little part of the stream. Let's see what it is, as I do actually enjoy a little bit of synthwave, but it does fit the channel in my opinion. And we're gonna say bye now. Bye now. Helps if I mute my mic, right? Take care, guys. Thanks for hanging out.